Hello everyone, my name is Jovan D'Souza and I will be presenting on the topic permissible deductions from gross total income. So, what are the deductions from gross total income? The Income Tax Department, with a view to encourage savings and investments amongst the various taxpayers, have provided various deductions from the taxable income. So, as we all know, taxes are an integral component in our country. Individuals who earn more than a certain amount are expected to pay taxes as per the existing tax slabs. While these taxes can be a bit, harsh on the bank balance of various taxpayers, the government also provides certain provisions wherein one can save tax. Tax deductions can help the taxpayers to reduce the taxable income, lowering their overall tax liability and thereby helping them to save on the taxes. As we can see here, these are the various deductions that are available to a taxpayer. So, from these various deductions, I will be presenting on these four deductions, that is section 80 IE, deduction in respect of certain undertakings in the northeastern states, section 80 JJA, that is deduction in respect of business of processing of biodegradable waste, section 80 JJA, that is deduction in respect of employment of new employees, and section 80 LA, that is deduction in respect of certain income of offshore banking units and international financial services center. So let's talk about the first deduction. So, in order to avail this deduction, there are certain conditions that have to be satisfied. So, in total, for this deduction, there are five conditions that have to be satisfied. Now, let's look at the first condition. The first condition says that the taxpayer begins manufacture or productions of goods or undertakes substantial expansion during April 1, 2007 and 31st March 2017. So, the taxpayer has begun to provide eligible services during April 1, 2007 and 31st March 2017. The second condition is that the deductions under this section is not available in respect of manufacture or production of tobacco, pan masala, plastic carry bags or less than 20 microns or goods produced by petroleum, oil and gas refineries. So the eligible services for this purpose are hotel that have 3 stars or above, nursing homes that have a minimum of 25 beds or more, old age homes, vocational training institutions such as, hotel management, catering, entrepreneurship development, nursing and paramedical, industrial training and so on. Then you have IT related training centers, IT hardware units and biotechnology. The third unit is that the activity or the business activity takes place in any of the northeastern states of India. So anywhere in the northeastern states of India, if the business activity takes place, it is eligible for the deduction. So, the fourth point is that the aforesaid business is not formed by splitting up or the reconstruction of a business already in existence. The fifth point is that deduction should be claimed in the return of income. Return of income should be submitted on or before the due date of submission of return of the income. And the amount of deductions, that is 100% profit, is deductible for the first 10 years. Now, moving on to the next deduction, that is deduction in respect of business of processing of biodegradable waste, of section 80 JJA. Here, the taxpayer who is in the business of collecting, processing, or treating of biodegradable waste for generating power or producing biofertilizers, biopesticides, or other biological agents for producing biogas or making pallets or barricades for fuel or organic manure can claim deduction under this section, that is section 80 JJA. The deduction should be claimed in the return of income. So, talking about the amount of deduction, 100% profit from the above activity is deductible for the first 5 years. Let's move on to this deduction, that is deduction in respect of employment of new employees. So as usual, that there are certain conditions. So this section has three conditions that a taxpayer must satisfy in order to avail its benefit. First condition is that the SSC has an income from business and is subject to tax audit under section 44AB. The second condition is that the business of the SSC is not formed by splitting up or reconstruction of an existing business. The third condition is that business is not acquired by the SSC by way of transfer from any person or as a result of any business reorganization. And moving on to the amount of deduction, only and only if the above three conditions are satisfied, the amount equivalent to 30% of the additional employee cost is deductible under section 80JJAA for 3 assessment years, including the assessment year relevant to the previous year in which such employment is provided. So, in order to avail this deduction, deduction should be claimed in the return of income. Otherwise, the deduction is not available. So, the taxpayer should keep in mind these following points while claiming this deduction. First one is additional employee cost, which means that total emoluments are nothing but the salary you receive or a certain fee or a profit that you receive from your office or your employer. So additional employee cost means that the total emoluments paid or payable to the additional employees employed during the previous year. Second point to be remembered is that in case of an existing company, here we are talking about the existing company. So in case of an existing company, the additional employee cost shall be nil if, for there are two reasons for this, that is, if there is no increase in the number of employees from the total number of employees employed, or the second case is that the emoluments are paid otherwise than by an account payee check or account payee bank draft, or by use of electronic clearing system. So now the third point to be kept in mind by a taxpayer is that in the first year of a new business, here we're talking about a new business. So in the first year of a new business, the emoluments paid or payable to the employees employed during that previous year shall be deemed to be the additional employee cost. The fourth point now is that the additional employee, so what is an additional employee? It means that an employee who has been employed during the previous year and whose employment has the effect of increasing the total number of employees employed by the employer as on the last day of the preceding year. But this point does not include these four following points. That is, first, an employee whose total emoluments are not more than rupees 25,000 per month. Second point that it does not include is that an employee for whom the entire contribution is paid by the government under the employees pension scheme. The third point is that an employee employed for a period of less than 240 days, or in some cases 150 days, if the SSC is engaged in the business manufacturing of apparel or footwear or leather products. And the fourth point it does not include is that an employee who does not participate in the recognized provident fund. Now, the last 2 points which a taxpayer must keep in mind is the emoluments in any sum paid or payable to an employee in lieu of his employment by whatever name called, but does not include employees' contribution to funds such as you have your pension fund, your provident fund, any other fund for the benefit of the employer under any law. Further, it does not include lump sum payment at the time of termination of service, of superannuation or voluntary retirement such as gratuity, severance pay, or your leave encashment, your commuted pension, and so on. And the last point to be kept in mind is that if if a new employee is employed during the previous year for a period of less than 240 days or 150 days, but is employed for a period of 240 days or 150 days, as the case may be, in the immediately succeeding year, he shall be deemed to have been employed in the succeeding year, and the benefit of section 80JJAA will apply accordingly. So this point simply means that if there is a new employee and in the previous year he was employed for less than 240 days or 150 days, but in the succeeding year, that is the next year, he was employed for 240 days or 150 days, he can avail this benefit. Now let's move on to the next deduction that is available to a taxpayer. That is deduction in respect of certain income of offshore banking units and international financial services, that is section 80LA. So the conditions that have to be satisfied by an SSE is as follows. That is that SSE is a scheduled bank and having an offshore banking unit in a special economic zone. Oh, the SSE is a foreign bank and having an offshore banking unit in a special economic zone. Or the SSE is a unit of International Financial Services Center. The second condition is that the gross total income of the SSE should include any income from the offshore banking unit in a special economic zone, should include from the business referred to in section 6(1) of the Banking Regulation Act with an undertaking located in the special economic zone, or any other undertaking which develops and operates or operates and maintains a special economic zone, and should include from any unit of the International Financial Services Center from its business for which it has been approved for setting up in such a center in a special economic zone. The third condition is that the report from a chartered accountant in form number 10 CCF certifying that the deduction has been correctly claimed in accordance with the provisions of this section should be submitted electronically. The fourth condition is that deduction under section 80LA is not available unless it is claimed in the return of income. And the fifth point is that a copy of permission obtained under section 23(1)(a) of Banking Regulation Act should be submitted along with the return of income. Now, the amount of deduction. So, if all the above conditions are satisfied, all the above 5 conditions are satisfied, then 100% of the aforesaid income is deductible for 5 consecutive assessment years. And for the next 5 years, 50% of such income would be deductible. So, that's it from me. Thank you very much.